everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and crypto market outlook for tomorrow's trading, tomorrow being the 5th of December. Plenty of movement starting off the week and plenty on the list to talk about. Now, in terms of the news calendar today, we didn't have a whole lot. Tomorrow's news, we do have some stuff going on, but before we jump on in, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. That's where you'll be able to sign up for our newsletter list so that you'll be notified every time one of these videos comes out. But along with that, in the email, we talk about different pretty much everything. Stocks, crypto, new ICOs, anything of interest will go inside of that email. So make sure to sign up for that if you haven't done so already so you don't miss anything that we're talking about. Along with that, in the live Trader subscription and trial info box here, you can click on this and sign up for a free 3-day trial in the live Trader Room so you can hang out with us for a couple days and see what it's all about. You can sit down with us and you can see the screens and you can see everything in the way that we're approaching the markets, how we're trading them, how we're analyzing them, and it's a really good way to kind of sit down and hang out with us for a little while and see the inside look into how everything works. So make sure to sign up for that if you haven't done so already. Now, taking a look at the markets, first of all with the euro. The euro is having a little bit of a hard time at the top. We're not really getting the continuation that I'm sure a lot of buyers would have loved to have seen. We had a big bull attempt, really strong bull rally, and then when they came back up to the highs, it was a complete failure and then a retest dump, and now we're all the way back down to the lows. So the fact that we're back down to the lows, that goes to show us that it's not necessarily that the bull trend is over in the short term, but it's more to say that the buyers aren't interested unless they can get some better prices. One obvious thing that stands out is the potential for a channel low coming into play, and this would be the secondary test of that area. And you'll also notice that that test on the low is not looking that good. If we widen it out a little bit to the more recent low down here, now it's starting to look really good. And we're coming back down and retesting the earlier level of a triple bottom between the opens, closes, highs, and lows at 18,405. So a lot of stuff kind of compiling all in the same location for potential bullish momentum back to the upside. With the lower high, one thing that you do tend to kind of think might happen when we make a lower high like this and we start forming a more kind of consistent wedge would be an attempted breakout. Now, an attempted breakout going against the bull channel, the bull trend rather, since pretty much the 8th of last month, would likely be seen as a fake break, and not many traders are going to go along with that. But what they may be looking for is a quick trap below that previous structured swing low where they can start buying in, assuming that any breakout below that is going to be a failure to get in cheap and then push the market back up again. Either way, though, everything is still looking really good to the upside. We might just need a little bit of a fake break low to really kind of kick things off to get everything moving back higher. Now, again, with the lower high, there are a lot of sellers that are selling into those highs, especially with that major failure up there, and they're looking for a bigger reversal down, so that may end up pushing price all the way back down into where it got stuck before at around 17,690s, 17,700s in that area too. So it might be a little bit more juice to the bear side, but either way, I think before we can start really looking for the longs, wouldn't be a bad thing to see a fake break of the lows to get in at a slightly better price. Over on gold, for the most part, gold hasn't changed much at all. We had that deep correction that we've been talking about for quite a while. They ended up choosing the overall swing low to swing high for that deep correction. And this is something that we've been keeping an eye on for a while. We've been looking at deep corrections every single time it starts pulling back. It usually pulls back about 70% or so. And this time around, it actually pulled back a little bit further. That was a pretty heavy pullback. If we measure the low to the high, we can see that they did bounce off of 78.6, so pretty much right around 80% instead of 70%. But either way, that deep correction down was met with massive buying pressure, and it pushed it all the way back up to near those highs. The way that this looks right now is simply the fact that we have failed a breakdown, we've failed a break up. Really, this just looks like the traders want to either consolidate into a big range, which we've been stuck in for quite a while, and we can see that pretty clearly. I think I just accidentally closed my tab there. Let's get that back. But we can see that on gold when we zoom out a little bit here, that for the most part, well, we're just in a big range, and this could just be a pause in kind of the middle of everything with a slight gradual rising support and a slight falling resistance for a wedge. And generally when you get that type of formation, you want to zoom out a little bit further and get a bigger picture. So if we go to a 240-minute chart, that's a 4-hour chart, we can see that that overall bull trend is definitely still in play since, well, really the beginning of 2017, and we're starting to get close to that larger channel low, and that could be the spark that they're waiting for. We have this larger channel low coming up across the bottom, and we have that little minor one, and that creates kind of a crossing point. Even if you look at horizontal support, we do have the same thing a little bit further down. So everything is kind of pointing to major support on a little bit more bearish momentum, and that could be down to around 1260 before we start seeing that bounce back up. But either way, buyers are definitely still interested. It's just a matter of how deep they want to let the market go before they start jumping in. But the area of interest for us, any of these major swing lows that are broken are likely going to be fading points because any breakout so far has been a complete failure. And the big one is going to be this overall swing low, because by the time they start breaking that, we should be around that larger channel low as well. So gold, for the most part, treating it like a range with an upward bias. Buy low, sell high, stay out of the middle. Over on crude oil, we have a beautiful bullish trend working its way higher, but we've ran into a little bit of a problem up at the top. We have a higher attempt that failed to break out of a new high. So we have a lower high failure and a possible turn back around. Kind of the same scenario we were just looking at. And really, again, it shows us that it's not necessarily that the trend is done. It's very likely that it's not. This is a very long ongoing trend. But what that does tell us instead is that the buyers are no longer interested in buying way up at the top, hoping that it goes a little bit further. That may have worked back here, but it's no longer working to the upside. We're seeing a little bit of that fear starting to step in. So because of that, what we need to do is look for a pullback. We need a pullback. It could come in a couple different forms, right? It could be the channel lows. If we get down in the more intermediary channel, we have a spike up into a channel working its way higher, or we could look for a deeper channel low test. Either way, though, I think right now we're much better off looking to buy as cheap as possible on crude oil, because right now we're a little bit lofty and it seems like we might be a little overdone at this point in time. So just looking for some cheaper prices, starting anywhere below a trap low underneath 56.76 and lower. The really nice looking trap would be all the way down here at 54.84 if they can dip that far down. But for right now, we're kind of lofty, and with a high side failure, I would rather see an attempted breakdown that we can start buying into to get some good pricing. And then over on the S&P. Now, the S&P is a little bit of a wild one. This one has been all over the place with that retest of major support at 605.5. Worked out beautifully. Major level of support, I guess technically held at 34.25. But with this monster wick on the bottom, a lot of people would consider that to be broken. I would be one of those. Overall, we're running into a situation where the buyers have been going up so long. We haven't stopped going higher, especially, I mean, if you look at a daily chart, it's just been non-stop to the upside. We've been bullish since 2009, and we just have not stopped going up. There's a brief little pause, 2015 to 2016, where it was mostly range-bound, and now we're back off to the continuation. And if we look at this, this does have sort of a reminiscent feeling of a 1 pullback, 2 shallow pullback, 3. And with that three-legged type correction, a lot of times one of two things is going to happen. Either this is a major reversal pending and we're going to come crashing all the way back down. Not very likely, but of course it is always a possibility. Instead, what that tells us is, in terms of Elliott Wave, if you're a follower of Elliott Wave, we could be looking for another leg down and another leg back up to complete and continue on the way of that 5 push type of pattern. Now, you know, arguably you could go in a little bit further and say, well, you know, what about this? 1, 2, 3, 4, and you can measure it up like that if you would like. You know, overall, we would still be waiting for one more push. But we're just a little bit lofty here, especially on the daily chart. And zooming in, well, we're at the highs, and you can see not really much has happened today. We had an attempted gap higher. They really didn't do a whole lot. They failed to break out of the highs. Then they tried breaking through the lows, and that's not looking so good either. Really, we're just being kind of, I guess, price oppressed from the upside because we're not getting any pullback. Everybody's running out of money. They can only buy so much until there's nothing left in the bank to buy more. And when everybody's singing in profit, when people start taking profit off the table, you usually get those flash crashes. So even though we have 26.0550 as a level of support and we're really far away from it, I am still leaving that on the table as an area of interest, just due to the fact that there could be a quick snap lower like we had back here down to the next major level of support. After that, 26.21 is the next level where we've created a little bit of a shelf inside of there. But for the most part, we're just really, really high up in price. And if anything, I want to see a breakdown. I want to see some cheaper prices. It's way too expensive up here for me to be interested. If we bracket today's price, using that information to look for a deviation lower, a 1-to-1 deviation level of support would be coming in right around, just eyeballing it, around 36 or 37, and then if we can get another deviation down, you'll notice that lines up almost perfectly with that 26.21. So again, just looking for some better prices on the Dow. Right now we are very, very high up, and well, we need a pullback to gain much interest. Now, as a side note, don't forget we do have a couple really interesting things happening this month. In the month of December, we have the Bitcoin futures, which are coming to the CME and the CBOE. And the CBOE is actually planning on launching them on the 10th, the last I heard. We seem to get a new date every day. But that's important because the CME isn't going to be planning on launching it until the 18th. So that gives the CBOE, a good week of exclusivity where they're the only ones that have it available until the CME jumps on a week later. Could be a little bit of an interesting ride. For me personally, I am looking very much forward to the Bitcoin futures. But for the most part, for the first week or so, or maybe the first 2 weeks since we have 2 exchanges jumping on, might be better off just to kind of sit and watch, wait to see how it responds and how it acts, but keep your eyes open because it could definitely be a wild ride, and it is going to be a market that I am definitely looking to add to my list of tradables. Now, in terms of the news for tomorrow, we do have 4:30 UK news. This is the services PMI for November, forecasted at 55. Previous was 55.6. At 10 o'clock tomorrow, we have the ISM non-manufacturing PMI for the US, forecasted at 59. Previous was 60.1. And then tomorrow evening, we also have some news tonight as well out of Australia. But tomorrow evening, we have 1930 out of Australia. The GDP for Q3 forecasted at 0.7% is coming out as well. So that's going to do it for the outlook for the future side of things. Let's take a look at the cryptocurrencies. Now, for Bitcoin, Bitcoin has been just an absolute rocket ship. Surprise, surprise, I know, right? Everybody is really shocked to hear that one. We pushed almost up to 12,000. We made it up to around almost 11,900 before turning back around again. And that was after that nice little pennant formation breakout. Now, if you didn't see that one, you probably aren't following me on Twitter, so make sure to follow me on Twitter because we talked about that nice little breakout there, and that offered up a beautiful rip to the upside. Now, the way that we're forming here, we kind of seem to be forming the exact same thing. Just a little bit tighter, not as pretty looking, right? The first one looked beautiful. That's one that you would find in the textbook. This one, not so much. Now, one thing that does stand out is how reminiscent this is of the previous big drop down. Right, this drop previously on the 29th was a 20+% dip. This is only a 10% dip. But we're seeing that continuation of a very similar pattern. We have the big drive down. Right, we have a heavy correction back up to about 60 to 70% of the move, and then an attempted move down to about 80% of that bottom leg, and then we turn back around and make a new high. Now notice this pattern right here, right? It's the same thing. We have a big move down. It's only 10% this time. It pulls back about 60 to 70%, tries to make a lower low, fails, and starts turning back around. And it didn't do it right away, right? If we look back at this one, you'll notice how they kind of bounced around a little bit and then really took off. This looks identical, just smaller, to the previous move that happened on the 29th. Now, being smaller, does that kind of handicap the move a little bit? Yeah, a little bit. We're talking about half the sizes here. We have a 20% dip down, and we have a 10% dip down. So the breakout to the highs here, if we measure this up, we can see that above the highs from this point on, they broke out about 3.6%. So if we're continuing that with about half distances, we should see a breakout above the high of day by about 1.7%, 1.8%, right, in that area, which is slightly, a little bit different. So if we measure this up a little bit here, let's widen this out so we can actually see what's going on. Pop this up on the highs. We should be looking for a breakout of about 1.8 or so, 1.76%, and that means that we should be looking for a high on a breakout of about 12,107.76. And that's just sticking with the fact that this pattern is identical to the previous one. It's just about half the size. Very important to understand these types of market structures, and now we're just kind of halving our way up. So a breakout to the highs at around 12,100 is the anticipation for Bitcoin. Maybe tomorrow, maybe this week at some point, maybe going into the weekend. You never know with Bitcoin when it's going to do it, but that is the anticipation, is that about a 1.7% break above the highs makes a lot of sense. If we go over to Ethereum, Ethereum is continuing to hold the line in the sand. This is that big level of support and resistance that we put in, and so far so good. You know, that fake break below the lows, we've broken above it, and they're now holding it over and over. We have 3 solid tests of that area, and they are all continuing to hold. And noting, if we go back in time a little bit, this is the same thing down here, right? We had that line in the sand that formed. They tried breaking out above it, but that was on news. That is not an organic breakout, and it failed. Came back, used it as resistance, fiddled around a little while, tried breaking out on an announcement again, and failed again, until we finally had an organic breakout that wasn't sparked by news, and you can see the follow-through from there, from 300 all the way up to 500. We're looking for kind of the same type of move, a parabolic move, as long as we can break out without having to have some sort of announcement to spark the fire. So as long as we hold this line in the sand, we're bullish. And if we start breaking down below it, well, then we're looking for use of that area as resistance instead. But, you know, level of support next underneath that at 401.31 to try to buy as cheap as possible. On Litecoin, seeing some very weak highs being put in, and those weak highs don't necessarily mean that the coin is in bad shape. All that it means is that we need to potentially look for better buying prices. Buyers are no longer interested in buying the high for a breakout because they're just not getting that breakout anymore. They tried to buy up here, and it only went, you know, maybe 1% through the high. They tried to buy here, about the same thing. Relatively lackluster on the highs, and now we're forming a 3-push wedge bottom. So really what we're looking for in this type of scenario is, knowing that the highs are very weak, we're looking for areas of trapping, right? We want to buy as low as possible. Previous swing lows are beautiful areas. Previous market structure are other big areas, right? Swing high, swing high, swing low, swing high, swing low, and high. That area of 92.92 is a beautiful level of support, and if we can combine that with the earlier rising level of support from these 2 previous lows, we come into a very strong kind of kill zone at 92.92, right at the lows of the wedge and the lows of horizontal support. So a lot of things stacking up in the same place. The way that we're forming right now, we have a 3-push wedge bottom that has so far held together pretty well. If we do make another low, we'd be looking for something, guess what, right around the exact same place. So everything is stacking up around there. Now, we might not get that pullback. It might not pull back that far. It might rocket right up from here. This actually looks like a pretty strong bullish signal for a move back up towards highs. But if we do get that continuation pullback, that's the bullseye that we're looking for right there for a bounce right back up towards the highs. Looking at some of the altcoins on the side here, we have Bitcoin Cash is fading back a little bit off of the top. They finally made that rotation all the way back up to the original range and are now fading off a little bit. Looking for the next area of support at the previous confirmed shelf, which is right there at 1384.49 for continued bouncing back up. And we're probably just going to rattle around inside of this range for a little while until we get some sort of news to kick it out of it. On Bitcoin Gold, we have a very interesting scenario here where we have a kind of a bear flag looking type of move, but we also have a falling resistance that is being challenged. So we have 2 different things that we can really look for. A bear flag for continuation and a trap on that intermediary low. We have a huge amount of structural support there at 261.54. Or, if they want to continue this wedge which is forming now, we could be looking for a breakout pullback type scenario and continuation back up towards those highs to retest 400. It all depends on how the market wants to respond here and how they want to approach. But right now, we need to wait for a little more info until they tell us what they want to do. If they want to break down, then we're looking to buy cheap at 261.54. If they want to break out higher, then looking for that pullback to buy in to shove the market back up to 400. ETP is kind of off my list right now after that flash crash down to about 5 cents. I'm just kind of keeping an eye on it right now, but not a whole lot to say because those big wicks right there really screw up the chart. So I'm going to leave that one alone for a little while. NEO is breaking out to the upside. We're breaking that falling area of resistance. Speaking of a breakout pullback type area, we're breaking out, looking for a pullback for continuation to the upside. Now, the one thing that does stand in the way is simply the fact that the bullish objective of that previous swing high has already been taken out. So if you are buying that breakout pullback, you're no longer looking for that retest there. You would be instead looking for a much larger breakout pullback and continuation back up towards the $50 mark. Makes a lot more sense to approach it that way instead of kind of this back and forth chop and slop that we're seeing right now. Now, notably, if we zoom out really far, we can see that those levels of support and resistance from October are still holding beautifully. So those levels, 32.77, 26.82 and 23.21 are big levels of support and resistance that we want to keep our eyes on as the market kind of cycles back and forth if it pulls back again. Otherwise, looking for a breakout back up towards 50. Now, a couple side coins that I'm keeping an eye on as well. We have EMC2, that's Einsteinium, E equals MC squared for you science guys out there. You science folks are loving that. It's one of my favorite names for a coin, Einsteinium. What a what an awesome name for a coin. We have a major level of support setting in at 75.80. We have a bullish flag that is breaking out and pulling back, looking for continuation to the upside. Short-term objectives at 8,400. Longer-term objectives to a new high above 8,900 and further. And this could carry on for quite a while. This is one heck of a lift to the upside, and it almost looks reminiscent of Bitcoin when it first started catching its rally up. So overall, looking for a continuation back up towards at least 8,400, and this could easily go another 20, 30, 40% if it really wants to start taking off, so something to keep in mind. And then we finally have Power. Now, Power Ledger is one that has been on pretty much everybody's list for quite a while after their amazingly successful ICO launch. After that ridiculously successful ICO launch, they had a huge rally all the way up to above almost 12,000 Satoshi before it started pulling back a little bit. And when I say pulling back a little bit, they pulled back a lot, right? Let's not joke around here. From the highs down to the major pullback low, we're talking a 57% pullback. The one reason why this is really standing out to me is simply because this looks like what you would consider a pre-pump scenario. Now, what I mean by that is when you have these coins, there's all kinds of different, pump and dump type groups out there. They're all over the place. And what you'll usually see is them buying in early, right? They haven't launched the signal yet. They haven't sent out the alert to their members or whatever. They're buying in, and then the market stagnates a little while. Now, this is interesting because if we look at the order book, there's like no buying volume except way over here where there's a gigantic wall. So there's really no buying volume at all. And if there's no buying volume at all, why is it staying supported here? Right? So we have a large buyer that isn't placing their orders in an obvious way. They're marketing in every time it dips down to those bottoms. They're not resting limit orders. Otherwise, you would see them sitting right here. So this is a very general kind of scenario that happens when you have a pump and dump. Buyers who are leaders of those pump and dump type groups, they buy in early so they can get in at a much better price. They then launch the announcement to usually some of their quote-unquote VIP members, which will usually see another quick spike up. And then it will sort of pull back again, and then from there, after the VIP and the whales have been diving in, the price is way up here. That's when they announce it to everybody, and everybody jumps in, and it kind of finishes off the move. So trying to get in a little bit early to this type of scenario basically means that you have all of this potential rather than this little bit. Not to say that that little bit couldn't still be 30, 40%, but I would much rather bank on 60 or 70% getting in a little bit earlier, and Power definitely looks like it's trying to do that at this point in time. So we have a pre-pump potential type of signal going on with Power. This could take, 3, 4, 5, 6, 7 days before you actually start seeing it fire off. But most of the time when you start seeing that pump volume coming in, usually within a week or so, maybe 2 weeks, is when you start seeing that breakout. A really good example of this just happened not too recently ago on Dopecoin. Exact same scenario, right? We have pre-pump volume coming in, and it stagnates, right? No buying on the order books, but the market just isn't dipping lower. When it does dip lower, it's bought up again, right? More pre-pump volume, starting to get heavier pre-pump volume. Maybe that's a VIP group coming in. We have more pre-pump volume, and that starts catching the market on a little bit of a lift, and then we have a breakout, and that's where the volume really kicks up, and that's probably where the announcement took place. And the entry point there, best case, is going to be around there. Instead of entering down here, you missed out on, 30 or 40%. That's the type of scenario that we're looking for right now on Power, and a potential kick higher on Power, looking for the next stop at 7,400, and this could easily rally all the way back up to above 10,000 Satoshi again, and that would be one heck of a move. So something to keep on your list of interest going into the next coming few weeks. Potentially about a week or so is what I'm looking at for a timeline, but it might take a little bit longer than that. So that's going to do it for the outlook for tomorrow's trading. Plenty of stuff on the list to keep our eyes on. All kinds of things happening every single day, and with a decent news calendar, at least we have something going on tomorrow. Maybe the futures markets will be a little more awake, although today wasn't that bad. I would prefer a little more consistent price action rather than one giant spike and then nothing for the next 3 hours. So that's going to do it for this one. As always, doesn't matter what market you're approaching, what market you're trading, always make a plan. It's necessary. You make a plan, you trade that plan, you follow your rules, and you'll be A-okay. Until next time, we'll see y'all then.